Now, unless you've been living under a rock, you've probably noticed the meteoric rise of this man and his company, Tesla. And the share price of the company has surged more than 1,600% since I personally invested in the company less than 2 years ago. And it's now worth more than companies like Facebook, Coca-Cola, Royal Dutch, Disney, and Volkswagen. The question on many people's mind is, how can Tesla be worth more than companies that are much larger than it, almost by any measurement? Now, to explain this, let's use the example of Volkswagen and Tesla. So Volkswagen being the world's largest auto manufacturer. So the value of Volkswagen is currently sitting at 100 billion, while Tesla is sitting at almost 800 billion. But Volkswagen generates 252 billion euros in revenue, while Tesla barely ekes out 24 billion. And Volkswagen produces 11 million cars, I believe. Tesla only produces 500,000. So how come Tesla is worth more than Volkswagen? So the simple answer is because investors think it is. You see, the market cap of a company is determined by the share price. So you take all the shares issued by the company and bought by investors, and we multiply that with the share price. And the share price, again, is simply determined by our good old friend supply and demand. So just because a company is bigger doesn't mean the demand for the shares are bigger. And the market cap of a company fluctuates massively. So during the Corona crash, the market cap of Tesla was slashed in half. So this number fluctuates, of course, massively. And on top of this, a surging share price like Tesla's can actually act as almost an accelerant to the market cap. So the more the stock goes up, the more it goes up. So we call this FOMO, or the fear of missing out. So the price going up can actually make more investors jump into the company, thus sending the value of the company even higher. Investors look forwards, not backwards. So what you can do for me tomorrow is more important than what you did for me yesterday. And investors are willing to pay a premium for the potential growth of Tesla. And while Volkswagen isn't really growing at all. So to illustrate this, Tesla's PE ratio, so the value of the company relative to how much money it's actually making, is sitting at 1,607, while Volkswagen is sitting at 17. How is this possible? Well, again, Tesla is growing much faster than VW. And if the value of Tesla shares were to stay stable for the next 2 years, but the revenue doubles, the PE ratio is cut in half. And if we look at the forward PE ratio, so if we take the current value of the company, but then we give them a little bit of a goodwill and we look at how much they can earn in the future, the forward PE ratio of Tesla is 207, so down like 80%. While Volkswagen is sitting at 7.7, so more than half of what it is today. So if we look into the future, the value of Tesla becomes much more healthy. Besides, Volkswagen only grew revenues from 213 to 252 billion euros from 2015 to 2019, while Tesla grew from 4 to 24.6, so a 515% growth. So you can see the major difference here. Also, in 2020, Tesla delivered about 500,000 cars, but in 2021, they project delivering between 850,000 and 1 million. So they have a chance at doubling their deliveries, while Volkswagen, as recently as 2018 to 2019, grew deliveries by 0.5%. So you're beginning to see why investors are willing to pay up for the shares of Tesla. But Tesla is not the only fast-growing company around. So how come it has become the 5th most valuable company in the world? Well, this is where we go from numbers to pure speculation here. And you see, Tesla is going after some of the world's biggest markets. So transportation, energy, and auto sector. So there are trillions of dollars to be made. And Tesla isn't only trying to take market share from competitors in these industries, they're trying to disrupt the way they work turning the industries upside down. So the potential is obviously much bigger than if they were to do things in a traditional way. Besides, if you look at some of the traditional players in these spaces, ask yourself, would you invest in Tesla or Ford? Tesla or ExxonMobil, Royal Dutch? You see what I'm getting here. You know, at some point, companies are competing for investors' money. So the main competitors to Tesla for money isn't Ford or ExxonMobil, even though they are direct competitors, but rather companies like Apple or Amazon, which are also fast-growing, exciting, innovative company. So this might help you explain why looking at Volkswagen versus Tesla in terms of the share price is not as relevant as, say, Apple versus Tesla. Besides, Tesla is pretty much the most popular and talked about stock in the world, and it's headed by, well, maybe the most popular man on the planet. Besides, this is not your average run-of-the-mill company. Again, they're trying to disrupt the whole way the world works. And with self-driving cars, bleeding-edge innovation, and a noble approach, Tesla has convinced, both customers and investors to join the movement, because let's face it, this is more than a car company, it's a revolution, which makes people jump in with both feet and just holding on to their shares, not willing to sell. And to put you in the mind of a Tesla fan and investor, so this guy, and all this might be anecdotal stuff, but Tesla is the prime candidate to solve the most difficult technological problem of all time and create self-driving machines. And can you imagine what will happen if Teslas are the first and only cars driving themselves around? I mean, what do you think will happen to the taxi industry, last mile delivery? What do you think will happen if, and this is actually the case, that self-driving cars are like 1,000 times safer than human operated ones? I mean, who in their right mind would buy anything but a Tesla? And with millions and millions of cars on their own collecting data and revenue from services like streaming, video games and movies, they're also going to have tens of thousands of charging stations. And so they will be supplying power to the world's largest charging network, customers' homes, and they can produce all of this with their solar panels, and they can store it with their industrial scale battery storage facilities. So it's like if a car company owned the gas stations and the oil wells. I mean, imagine what that company would be worth. So as a happy Tesla customer and investor, I'm very excited to see what's coming in the next couple of years. And if you're one of the surely thousands of investors wanting to buy Tesla but is worried about the hefty valuation, I definitely see where you're coming from. And all I have to say to that is, if you strongly believe in Tesla for the long term, I think the only reasonable thing is to buy shares now before it's too late. If it goes down, you can always buy some more. So that's it. Hopefully I gave you an idea of how a small but growing company can be worth much more than a gigantic established player. Now, it's not always a fair valuation, so I'm not saying Tesla should be valued at 800 billion and Volkswagen at 100, or that Tesla is 8 times as valuable as Volkswagen, but that's the price the market has put on the companies, so we just have to go with it. There's no point fighting the stock market, and in the end, sadly, investors decide the worth of a company, at least on the public markets. So let me know what you think about Tesla and its valuation. I'm sure there's a lot of opinions out there. If you have any questions, drop me a comment in the comment section. Thanks for watching. As always, I hope I'll see you in my next one. Have a good one and take care.